Matteo, you famous one. So you're famous here in Fintech. You've been here for a while, so now you're working as a partner in SBT Venture Capital. So it's a fund that invests in startups in the fintech sector. You're also an entrepreneur. Right now, you are working with a startup called Fintech Stack. Okay. Philippe, you the founder of Cantox, which is very popular right now. So you work with foreign currencies and exchange rates. You're cheaper than banks. And we also have Eloy Loya, the co-founder of Loanbook. It's also a platform where any person can use their services. So any person can lend money to those companies. And then we have Francisco Amian. He's a co-founder of Deuda. So it's a newly founded company. I think things are going well for you. And you do invoice clearing. It doesn't sound very digital. It's something we know, we've known for a long time in financial services, but thanks to the internet, you make that very much easier. So now I will be the moderator, the speaker here. So first question: does fintech imply the end of traditional banking? Clearly not. So when we speak about fintech, and obviously we have three startup founders here, but we will always speak about startups. So there's two models. One model that aims at competing with traditional banks. We want to provide disruptive services and grow with the participation of banks. And then the second group is made of startups using banks to allow them to exchange services in an easier way, in a cheaper way, and especially with more digital content. So Philippe might express an opposing view, but the idea is that it's not going to be that easy for a startup to do traditional banks' work without interacting with them. The proof is that many of the banks are investing right now in startups. They are investing in startups, allowing them to be faced to the market in a more digital way. So there's a balance between disruption and collaboration, and that's where things will happen. You're speaking about competition in Western countries with a lot of big presence of banks. It might be different with emerging countries. Do you share the same view? Yes. I believe the model of competitive relationships is this one. So we are launching new challenges to that sector, and we are gaining market shares to the traditional banks. But I believe we also need banks. The vast majority of fintech projects are still based on traditional banking services. So without banks, we couldn't do what we do. So about the question whether banks will disappear, I don't think they will disappear, but it is clear that they have to evolve. They will evolve, and for those who will not evolve, because there's some of them that are innovating, trying to adopt new proposals, and the ones who do not will disappear. We've spoken here about initiatives from big banks who are investing in that sector. That's a first step, and they say that a bank will gradually become financial services providers. They will become a financial marketplace. How close are we from that? How viable do you believe it is in European markets? Are they that open to that level of collaboration? I believe there's big differences between banks. Some of them have understood that we need digitalization and it's a change of paradigm. You cannot move backwards. And many of them do what we call cosmetic bank. They invest in a few startups. But we're talking about digitalization, but it's about cosmetics. For me, it's cosmetics, cosmetic change. No, there's no single bank that has adapted his core services. Most banks will close 8% of their branches, but that will be unavoidable. The only bank who has started talking about that is Société Générale in France, that we will close most of their, like 20% of their branches before 2020, but I think it's going to be more than that. Banks are investing in the stock exchange out of their core markets. Spanish bank invest in fintechs, but not in Spain because they're afraid of kind of cannibalization. But the real challenge is in the real change with their core business, not only with this cosmetic parts. I totally agree with Philippe. First, answering your first question, I do not believe we will replace traditional banks, but I believe that fintech will change the way banks operate and the business model. We will have to reinvent that. And there's a lot of differences between the countries. What's clear is that in Spain, banks are still looking at fintech through the innovation departments, so people with white coats, and it's not the way of introducing the proper way to introduce a new business model. There is a reality outside, something we want to observe and understand, but banks are not taking the possibility of real transformation seriously. So we are starting to change the way things are done, but we do not want to replace traditional banks. We want to compete with them and offer services that are more adapted to our customers because we are more flexible. They have the size on their side, but they will have to evolve. It will be in the short run. It's not going to be today or tomorrow, but in 5 or 10 years, the banking business model will have totally changed. We also need to say that it depends on the geographical places. If we take England, there's 22 banking licenses asked by startups. We were speaking about that before, and not all of them will have that license granted. But if we take a country where the regulator tries to boost innovation, the market will change. And that's a world record. There's no country in the whole world who has that many potential new banks who want to enter the market. BBVA has just invested in one of them, in Atombac. Exactly, that's outside Spain. That's confirming what you just said. But it's also a good example. I'm understanding that investment as an investment in laboratories. We want to invest in other countries, a country that is not ours, to see what's the scope of growth for these new banks. Is there a difference between fintech startups who are dealing with core banking services and the others that do not? The ones that are offering additional services. Fintech are only, or the companies that are developing banking software are not fintech companies, in my view. If you develop banking software, you're a software company, you're not a fintech. If you are competing, then you are a real fintech. But there's no real definition. For me, a fintech is a company that is, proposing a new model, and that's why there's a high level of resistance by the traditional banking model. So when we speak about innovation, especially in front of an audience that's really open to innovation, there's a nice part of it, a nice story behind that, but there's also a painful part. When we speak about innovation, there's always this elephant no one wants to see in the room, because it could mean destroying jobs, and it implies reconverting the whole sector, such as the banking sector. So there is a high level of resistance, and it will take some time before it becomes effective. So the controversial part here is that because we want to overprotect the traditional banking system, they do not allow us to grow enough. We do not have a developed fintech sector in Spain, so we'll have major actors in the world that will enter the Spanish market and keep the pie for themselves. That's something that can happen. I agree when you say fintech is offering an alternative in financial services to traditional banking entities. But I want to go a step further. There's two sides here. There is a threat for the traditional companies that come from fintech, but traditional banking business is defining what's its core business, because it's not so clear right now. The bank's profitability is not that good. The regulation has changed, and it's not only due to new technologies, but they've just come out of a financial crisis that has drastically changed the way they make money. And they have two challenges ahead of them. They have to understand what is their core business, because right now it is not clear to them. They have to close a lot of branches, first of all. And, that typical business model of lending and credits is not sustainable. They have to reinvent themselves. And that part of the business is too big. Fintech companies are, messing up a bit their business, and we're offering alternatives to their core business. So the challenge they're faced with is big, and if they're not able to do that, they will have big problems. What new business models are offering fintechs, or that? What is the disruption about exactly? We here speak about digital transformation, about looking for new business models, But what are we really talking about? What can banks do? What is the future banks? What are the future banks going to look like? What new business models would you suggest? I don't think they can reinvent this business model. Banking services are what they are. I cannot see a lot of room for innovation, but they have to know how they do it. They will not change the products themselves. There's always be a lot of loans, factoring. You want to finance the purchase of your car. I do not see a lot of disruptive products coming into play. We speak a lot of big data in banks, how they can become a player in that sector, and they want to use the information of their customers to sell them even more things with more loans and to create more debt for people. So the average American is highly indebted. The average Spaniard is indebted as well, and they want to sell more products. So when banks speak about big data, the only objective is to sell more products. If you go to Amazon, they will try to make you buy more things through credit. So big data means selling more products. That's the reality. They have nice plans with big data, but that's what it means. You need to buy more through credit. And you know what it meant for Spain 10 years ago with the real estate sector, but that could be the same.
I would say that this happens in banking and in any sector where you are selling to the final client. With big data, we are using millions of data at real time. So in the case of banks, what they are selling is credit, basically. So in the case of a retail sector, they will sell whatever they have to sell in their sector. This is the obvious evolution of big data. I think that starting from this point, data is the oil of the 21st century. The more data we have and the bigger our capacity to understand this data, and if we are able to use this data through artificial intelligence, then it is these players that will be able to succeed most in this new type of economy. Banks have something that's very powerful, and that is they have a lot of data. To what an extent can they use this data not only to sell more credit, but to reinvent themselves and to become a producer of artificial intelligence? Not to sell it, but to understand better what it is that we need and then sell it to other industries. I personally think that this is quite difficult. I think that it'll be big technological operators that will do this, such as Google or others. I think that the banking industry is too old style in this sense. They have a lot of data, but I think that they are only capable of selling more credit with this data. I don't think they're able to reinvent themselves, becoming an industry that turns data into a new industry, an industry based on artificial intelligence. This could be a possibility, but I personally think that it would be quite difficult. Therefore, the evolution regarding the user's experience is also quite difficult. I think that regarding users' experience, when we think about traditional banks, banks are very technological companies. We shouldn't forget this. However, it's a type of technology where they are focusing on security, consistency of the data, and this means it's very powerful, but at the same time, it's conditioned by many factors. whereas innovation that has to do with users regarding cell phones or a lot of information that may be needed, this is very difficult for banks to deal with. So this is where there is a type of confrontation, and I think that it is in this case that we fintech companies have more of a possibility. Firstly, I think that the most disruptive experience that we may have during the following years is not at a final user level, but at the level of the communications infrastructure among financial companies. SWIFT has existed for more than 40 years, and the way it operates is centrally. Therefore, banks communicate among each other, but SWIFT sends the messages and it acts as an intermediary for communication. On the other hand, at present, there is no startup that is really disruptive in fintech. I'm sorry, but my Spanish isn't good enough. How do you say the opportunities that are easier to grasp? Today's startups are taking advantage of banks' deficiencies. I think the only really disruptive technology is LogSec. And what could this mean? Firstly, if we're talking of a multi-distributed technology, all of the transactions can happen in real time and they can be cheaper. Then regarding customer onboarding, that is client identification, we could all have our own wallet, our own identity wallet. I don't know if you have tried it, but I have accounts in 3 different countries. I even have 2 accounts in the same bank, a personal one and a business one. And every time I use them, I am requested for the same type of data. For example, Paribas in Paris and in Italy. But even if it's the same bank in the UK where I have 2 different accounts, I always have to identify myself. This is a very important difference which no startup can confront at present because we need more technology. Therefore, I think that visibility will occur in the underground, in the basic communication infrastructure. In the past, what we need first is a deep transformation in the infrastructure so that then we can really talk about disruption by the startups. Therefore, first we need certain processes, and then we will pass on to the services, right? Let's talk a bit about venture capital, which is what we hear about most when we talk about fintech. It looks like everybody is investing in fintech. Last year, Accentus, I think, invested about $13 billion. This year, during the first half of the year, that amount was already surpassed. Therefore, we think that at least it will be doubled. So what is there behind all of this? Is it just a bubble? Can it later work against entrepreneurs when they're trying to sell their company or trying to become associated with a big bank? Can it be an impediment to have so many investors among the shareholders? What do you think about this whole movement? We think that there is a financial global bubble because of what happened with the European Central Bank and in the States. We think that there is a generalized financial bubble worldwide, and the consequence is that there's also a bubble in the technological world. Fintech is one of the 2 or 3 hottest sectors at present. Therefore, I think that the amount of investment is exaggerated. But this has not only happened in fintech, it's happening in the technological and financial world in general. At the end of the day, there's always been cycles. There will always be. So they will come down. But right now, I think that too many projects are being financed. What's important is that when there is a bubble, even bad projects are being financed. I think that right now there's too much investment going on in fintech. There are projects that 4 or 5 years ago, when we started and when fintech hardly existed, would have never received financing. Now they are getting it. Therefore, at the end of the day, I think that Darwinism will come into place. I think that that's what will happen. Therefore, you believe that it's a question of that the sector has to mature. Yes, for sure. The financial industry is the biggest industry that has never been disrupted. It is so much bigger than the press industry or the music industry. Therefore, investors see huge opportunities, obviously. And I think that there are opportunities for the next 20 or 25 years old. At some point, there will be a downturn, but the opportunities are there. Don't take it personally, but I don't agree. On the contrary, you are saying that there is too much investment in fintech by funds that are not specialized. Yes, I agree that this is the real problem. There are funds that are investing more than $500,000 because fintech is trendy. And the truth is that you're not going to confront a technological startup in the financial world in the same way that you would advise regarding strategy, a normal startup. The second problem I see is that worldwide today, I think that there's a difference between the first round of financing and the subsequent ones. That's why these startups look for stupid capital, in inverted commas, and not intelligent financing. I also wanted to say something regarding banks that invest in startups. I don't think that a bank is the most probable exit for a startup, and I believe so for two reasons. Firstly, because if a bank invests in a startup, it's because it is attractive in order to improve their own services. Therefore, it's not going to give this competitive advantage to other banks because it would be this would mean a conflict. Secondly, if we really wait for a startup to develop as much as possible, a technological center would be a better place because from a geographical point of view, it can be helpful in order to sell in more than one country. And because it is the ideal way to then multiply its impact regarding sales in different spheres. In fact, BBVA is the only exception. Then we can see investment in Actum. I think that the idea is that there are two philosophies. We have Santander and Open Bank. Therefore, we do it from scratch, or UniCredit and Bank, which I think a couple of months ago launched an example in Vienna. They created a totally separate bank with a different infrastructure, with funds, licenses, where they transferred all of the licensing. And the other approach is the one I mentioned. Therefore, these are two ways of doing the same thing. I would like to say something. Firstly, I think it's important to differentiate where this bubble may be happening and where real investment is happening. I think that from a geographical point of view, we need to clarify that the perspective that's being expressed here is international, and it can't really be applied to Spain, where investment in 2014 was 10 or 100 times smaller than in the UK. 1,300 million compared to 13 million. Therefore, it's not comparable. The Spanish situation is not comparable to the international one, particularly in the case of the United States or the UK, and France and Germany are beginning to develop, and we are really far behind in Spain. Therefore, from a geographical point of view, there are really big differences regarding funding and startups. This is a huge risk for the financial surroundings of the places that aren't so far off because there are no borders. Therefore, they are investing in good ones and in bad ones. But if they invest in many, then probably they're going to be many good ones, so you can help them to grow. All of us here are working in this, and one of our options is going abroad. Therefore, those of us who are investing more in the UK, when companies go well there, will want to come here to Spain. Therefore, those of us who are competing with unequal opportunities will face a more difficult situation. Therefore, traditional banks that are here in Spain will have, I wouldn't want to say disrupted, but would have slowed down local fintechs, but will not be able to do the same thing with international ones because they will be bigger. Therefore, I think that for startups, their consolidation will go through consolidating among themselves. I think that that would give them volume and strength. However, I doubt that we Spaniards will manage to get into that unless we have gone abroad. If among those of us who are here, if we go abroad, I think we will have opportunities in the future market. But those who don't go abroad, I don't think we will because people will come from abroad. Therefore, we need to increase in volume, and in this way, we will be able to compete with different industries. That way, we will be able to come together and offer different services, e-commerce and many other sectors. Therefore, there will be technological companies. I'm sure there are already some who offer many products, e-books, Apples. And their liquidity is very significant just because of the field they work in. I think that it is these companies that may realize that fintech is a good way to make profit of their own funds. Therefore, there is a trend of investing in fintech, but it's very localized in certain markets, and this poses a risk for the rest of the places where this investment isn't occurring.
Well, I do not fully agree with Etienne's perspective. We will see a lot of banks buying fintechs for two reasons. Very often, we believe that a bank buys fintech because they want to improve their processes, become more efficient. And I understand that because fintech can provide technology, software. That's true. But the biggest potential in fintechs is that at the end of the day, it's a tool for growth. For instance, we'll speak about the Banco Sabadell. It's a Catalan bank. So they bought a part of Lloyds Bank, UK, and they did that to grow internationally. When you're a bank, you need a bank that wants to sell itself, and then you need a government that accepts that. They also tried in France. Well, Santander tried in France, but the French government said no to Santander. And if Sabadell had bought, a strong fintech, can operate all over Europe. They do not have to invest in a brick and mortar bank. They can provide the services to millions of users in a digital way. Fintech are a tool to growth internationally. It's a very strong tool for companies. The value is not only efficiency, is that you can grow internationally, and that's the biggest value of fintechs. You can conquer Latin America through a fintech company without investing in banks, and that's much faster, and that's the highest value in fintechs. Yeah, that's a big leap forward. I agree with you, but before that, before obtaining that international growth tool, you need to consolidate the services you're offering. You have a small problem. We do vertical services, then that's more difficult. We are resolving a small part of the financial problems of companies and people. We need to provide a more integrated service. You can be a good complement for a bank in terms of financial services, but if you want to expand like a bank, you need to bring together a lot of activities. We have now almost 2,000 customers with small companies, mainly in Europe, and we only offer them currencies, foreign currencies. So when a bank will be able to offer loans and foreign currencies and discounted promissory notes, they'll have more possibilities to grow, but they don't see that. That's where the potential is. The potential is there whenever integration is performed well. I don't believe you have to integrate all that in that case. You need to let it be somehow. Or, when you buy a fintech, you can lose the founding team, and you will lose a lot of value in that purchase. So it's a complex project, and there's not that many fintechs that are well structured in order to survive after an integration process with the bank, with a merging process. That might happen in the future, but not now. So speaking about investments, especially here in Spain, and in spite of the bubble in the fintech sector all over the world, it's not still happening now. And regarding the venture capital, I believe, we haven't evolved that much in terms of venture capital, but our investors do not understand fintechs. That's why we have to look for venture capital outside. Then we might have a lot of other investors, such as banks, to help fintech grow. They're not willing to do it. Maybe they not have, a long-term vision. Maybe it's because they see us as competitors, and they do not see the room for collaboration there is. I've talked to banking top managers, and I've told them, "Oh, are you investing in projects worth millions of euros?" I remember a project called YAP, and Telefonica was investing hundreds of millions of euros. I don't know how things will turn out for them, but when I see what they could do, investing only a million euros in 100 startups in Spain, it would be probably more productive. But anyway, bank will finally see that they also have to invest in fintech in Spain. So you're not really competing in the financial sector. Do you think fintech will eventually do? Will it happen in the future? Or do you believe new players will appear that will become the new Google or Yahoo in the fintech sector? I think they're already there. They're already offering financial services to their customers, but they do not want to become a bank and have a banking license. A bank is subject to a high level of regulation, and it's not like Google or Yahoo. Becoming a bank would have a lot of impact on their profits account. But they want to offer that customers database financial services. If Facebook decides to offer loans to their users, and if Facebook works with 50 partners and they take the best offer to that user, where's the value? Who gets a lot more money? It's Facebook. It's not the bank who's offering the product. And that's what they will do. But I do not believe they really want to become banks. Well, the legend says that Facebook asks for banking licenses in many countries. They're acting stealthily under the radar. But what's easier now is to offer peer-to-peer payments. And you can do that in all social networks. As a matter of fact, in Israel, there's more than one company doing that, integrating payments through social networks. They're just adding a payment button in the mobile device. And they just want one of the big players to adopt that software. We're just hoping for that. I believe that the big dot-coms are winning the data battle. All of them are winning. And we all know that monetizing data is the next big challenge. I believe that as soon as they'll decide to wage the biggest fight, it will change. That's why Western Union is not giving loans. Why are they not doing that? They could do it. They have huge databases. They act all over the world, but the the legal regulator will kill them, and they are present in a successful market, and they do not run that risk. We could see that happening in Africa and India as well. Yes, I agree. The strategy is not to perform banking services. The big dot-coms, they have a lot of information in their hands, it's true. But they will be able to market that information. They also have a connectivity, the communication channel. Google is not selling right now, but that's not everything. They do not create the information, but it's the biggest information portal on the web. Is Google going to become a bank? No. Will it become a channel for banks? Yes, probably. When you access your bank website, you can see the information. But then in the future, you might see what you need through a single website. Google have the communication channel, they have the information. So who will earn more thanks to that? The one who's selling it, the marketing channel. That's where the difference lies between retailer and a manufacturer. So it's all about being compliant with the regulation, even if they only get a small commission. But the traditional banking system is losing the traditional part and getting these high commissions. They will become manufacturing plants and get a small commission on what they do, financial services. Definitely the big dot-coms will end up using that channel to market their financial products. So if you agree, we will start with a round of questions. It was really interesting to hear that debate, and there's representatives of companies that want to compete against the bank and are companies that want to collaborate with banks. So my question is the following one. What is your point of view speaking about back ends of banks to face the digital revolution and to give services to millennials, those guys that are going to work with a smartphone only? Do you believe banks will invest on turning those basic systems of information into their hardcore business? Or do they just need software and without having to redesign all the banking structure? You know that for the digital environment, traditional banking processes and CRMs are becoming obsolete, and they won't be able to provide services to the new generations of financial services customers. What is your take on that? They need to reinvent themselves or use the fintech software?
Right now, there's a clear tendency by the banks, particularly the most innovating ones, to totally change this type of banking, particularly because the way they've done it until now is that they have just added pieces of software or services. This is why companies like Mashery in the United States or APG, for example, are doing API enabling of banking infrastructures. And that's why they've been so successful, because this is the most easiest thing to do. Now there are a few new suppliers, the Pfizers of this sector. I know this from firsthand, that they are using these new banks, these new startups are asking for licenses at banks in order to design a type of software that is totally new, that will adapt, and it will be native IPA enabled. Banks won't do everything. They will only use these people in order to provide services. This has to occur natively. I don't think that anything is going to be built on top of what has already been built. Talking about millennials, I think that financial inclusion is the biggest opportunity for fintech worldwide. When we think about financial inclusion, we're thinking about Uganda, Nigeria, Central Africa. But in England, there are 2 million people who have no bank account, and 38% of the population in the United States are not in a good situation either. So, and the banks don't have the infrastructure to attend these people because they are lacking funds. Therefore, the companies, banks, startups, call it however you like, whoever manages to improve the situation for these people who are underbanked are the ones who are going to have the most success. I would just like to say that I don't think that the problem in the change that is required from traditional banking comes from the technological point of view. I think that it is necessary for banks to change. You know, that their data models have been conceived from a single person point of view, be it a person or a company. Therefore, when the bank looks at you and considers you, it doesn't bear your circumstances in mind. I'll set an example. When a bank looks at an invoice, it sees the data in two parts, but it can't link third parties to the invoice. Therefore, it's missing the connection between the data. So the data models are obsolete. They have a lot of data but don't know how to use it. They are aware of this and they are beginning to change it. But I think they need to change the entire system. I think they're already doing it. They are aware that they have a huge amount of data which they are unable to use, or they're using it, but they're not making the most of them. Hello, I'm Jesus Perez from Financial Red. My question, these initiatives add value to certain, value proposals to these banks. I would like to know if the market is transparent enough to understand that there are some accounts that are better than others. How are normal people going to access these products? How do you see the strategy of product distribution, and what is going to be the role of the media? Because we can see that there has been certain kinds of technology that hasn't been as popular, although other ones that weren't as good did really expand. I'm not really sure I fully understood your question. That's because you're a foreigner. That's normal. Now there are products that are better than what banks are offering, but people do not have the information about these products. So the question is, how are you going to get new clients? How are you going to reach out to them? There are entities that are very good at advertising themselves. Banks, every time they sell certain products to certain people, in the case of banks, they throw stones, they shoot themselves in the foot many times when they sell products to people in a way that is non-transparent. All of these bad practices by the banks are great marketing for us. Therefore, people look for other alternatives. At the beginning, it's not easy to start because at the beginning, nobody knows you. But, for example, Facebook, it doesn't get 100,000 clients a month. But bit by bit, when they see that you're transparent, that you don't try to fool them, that you stick to your word, then it works by word of mouth. In Fintech, usually the way we work for marketing, it's not very innovative. We talk to different companies to try to get new users. But what we do is generate trust, and this grows slowly. I always say every time that banks do something wrong, it's great for us. Every time they manipulate the currency exchange market, every time they manipulate the raw material market, all of this is great advertising for Fintech. Therefore, our greatest tool of marketing are the banks, because if this didn't happen, Fintech wouldn't exist. Just to add to what Felipe has just said, it's true that banking is not precisely the most valued sector at present. It's probably at the end of the list. It's done many wrongdoings. But we also have to say that we have to bring something forward that generates trust. it's true that banks have done something wrong, and therefore there's a lot of mistrust towards banks. And there's the risk that this mistrust could apply to all of the financial sector. In this sense, in our country, savers or people who have applied for a credit have been used, they have been mistreated, and they really do not trust this sector. Therefore, in the fintech sector, a key issue is how to generate trust. We also have to face this challenge. In general, I think that fintech agents, we base our action on transparency. Our market, our exchange, our currency exchange market has to be transparent by nature. And on the other hand, we have what we call client experience. Therefore, for example, a mobile device that is very easy to use. In our case, for example, one of our strong points is that we are very agile. We give credits to small and medium companies very quickly. Therefore, transparency and client experience must be based on us being quick. I think that this is the main way we are getting clients from banks. We don't have much time. We have some questions that we received through Twitter. Yes, at the beginning of this seminar, we launched a survey to see what users who are following on streaming. We asked if they think that fintech is going to change the relationship with banks. Most of them think that it will, though 40% are still doubtful about it. Thank you. Thank you, everyone. Thank you, everyone who has participated in today's meeting. See you next time. Hopefully, we'll meet here next year again, and we'll see what situation we're in. Thank you.